Okay, hello everybody.
Hey.
So we're finally back after who knows how long, probably a longer time than we really anticipated again.
It's been a while, but you know, there's always an intermission between seasons. This is season 2 now, the beginning, a new order. Where we're gonna start documenting all the events
Right.
after the big crash.
Yeah, right now we're kind of in a very big crash. Spies at 440.
Very spooky poopy crash.
Has a lot to do with China.
It smells really, really bad.
Smells a lot like a China. Let me just lower this really quick.
So season 1 was the pandemic, China's COVID outbreak. And season 2 is going to be China's real estate bubble pop.
Right.
And to kick things off, we're just going to talk about it, overview it, quick brush up, tie it to Tether, crypto, how it's just messing everything up.
It's pretty much messing everything up right now, especially we saw it today. We found this Reddit post real quick, just kind of like talking a little bit about China's real estate problem, and most importantly, Evergrande.
Evergrande. Like Ariana Grande, but
Evergrande.
Evergrande.
Or like the Ever Given, you know?
Like the shipping ship container that blocked the Suez Canal and caused a crazy supply shock.
Did you send me that picture actually?
No, I did not.
Send it to me?
Mm-mm.
No, but that was a really funny one. They just like they photoshopped it. If you find it, if you could send it to me through WhatsApp, I'll put it up here. There's a really funny meme, and it's kind of like the situation right now. Like I haven't read this. We just found this right now, which is like all the assumptions on China's growing property crisis, and it kind of reminds me of this guy. You know, right here. Let me just. The first time I saw this was like in a meme, and it was basically about like when your managing director asks you about that 200-page report that you didn't read, and this is a response that I guess we would be giving in regards to this one Reddit post.
I mean, it's all right. Like, overrated as fuck, in my opinion. I mean, and you know what though? That's typically how the bullshit goes. You feel me?
But no, we know a little bit about this. we didn't just completely blow this thing, but I thought it was hilarious with that meme specifically. But let's just go right into what's going on with the Evergrande. It's the second largest real estate developer in China,
and they are in a $300 billion debt crisis right now that they're gonna have to default unless big old communist China steps in and bails them out,
which they don't really do.
They don't. No, it's like not in their moral code or their ethics or their culture, really. But being that it's affecting the global economy at such a severe rate, they're gonna have to do something. Otherwise, they're gonna be known as the most hated country in the world.
And you ask yourself, you're like, all right, well, this is in China. Like, how does this affect the whole world? Like, how is this even an issue? And in reality, the issue of what's going on in China and how it affects us is because there are U.S. companies. There are U.S. companies who are pretty much invested in the Evergrande company. And a lot of these funds, investment funds that are invested in the Evergrande, they also hold many of corporate America's employees' 401ks. So Vanguard has some bonds and stocks in Evergrande. Bonds being, you know, a promise that it's basically just debt. Like they've lent them money, but they want a consistent interest rate. And you have BlackRock, you have HSBC, like it says here. UBS. Well, no surprise UBS is there. I mean, they lend so much money to Huang.
Because I mean, if you really think about it, if they're the second largest real estate, you know, company in China, they've built up so much trust and credibility that people are willing to throw their money at them for investment.
Yeah.
not expecting, or not really.
Well, there was a huge period of time that everybody was like, "Oh, let's invest in China. It's safe," and all that stuff. You remember, like, it
Yeah.
was like a big point, like in the beginning of the year.
Right.
And look at the Evergrande stock since year to date. It's just been going.
It's just been
down.
shitting the bed.
Exactly. It's been shitting the bed.
Exponentially, really. It's like an exponential chart, but inverse.
So it says Evergrande owns more than 1,300 real estate projects in over 280 cities in China, and has a property service management department. Has 200,000 employees. See, that's another thing. It has, it also risks not being able to pay their employees because of the high amount of debt, and then also the interest payments. And we'll find out Thursday if they're going to be able to make their payments on this debt, or if China's going to bail them out. It looks like they're not going to be able to, but they've been liquidating property and stuff at discounts.
Well, not only are they going to have to pay their employees, but they also have a bunch of projects already in the middle of construction that they're not going to be able to finish because they can't fund it, right? They're in so much debt that they're going to have to put all these projects at a standstill. And all these projects have been bought up by other people or companies already. So it's like they are expecting a return for what they paid for.
Yeah,
it's pretty messed up.
There's people who have put on down payments, into freaking these projects, and they're all upset because they're starting to see the shit hit the fan with Evergrande, and basically they're probably not going to be able to move into these condos. There's a lot of new construction condos, like Elihu was saying, and not only that, like, I was reading an article today on the Wall Street Journal, and it was talking about how Evergrande would be buying property at premiums to outbid competition way more than the property was valued, because in a sense they're using the bank's money, and
they don't care.
They don't care.
They don't care.
It's like they just transfer the risk to.
Because at that point, it's not really their problem if they can't pay. It's the bank's problems.
Whoa.
Because they.
Yeah and no.
It's a lot of money.
Yeah, it is. I mean, yeah, it is the bank's problem, but it is also the people of China's problem, and also the American funds that are invested in them. Because if there's a liquidation, a forced liquidation, the funds will get their money, but they probably won't get as much money. They've already lost a ton of money. I mean, BlackRock has been buying this since July. UBS has been in there for some time. I mean, there's like a whole list. I don't have a Bloomberg terminal. I can't really see it, but I was seeing another person evaluate it earlier today. And it's really just insane at the losses that have already just amounted. And not to mention the bonds that have been purchased as well by U.S. companies. So if they get forced liquidated, then yeah, some people get their money back. It might be better, but at the same time, China's economy goes really bad, goes into the dump. And then there's the other alternative, which is like the bailouts. And if China bails out this Evergrande company, then it kind of incentivizes, or it kind of says, hey, we're promoting this in a sense. It kind of is like what we did in the 2008 financial crisis, unless they implement some kind of laws to like go against like these over leveraged individuals or companies. But in a sense, where's China going to get that money to bail them out? By paying off their debt to all the bondholders. They have to liquidate treasury bonds from the United States, basically getting dollars to buy back their yen, therefore raising their yen price, the value of the yen relative to the dollar, and in effect weakening our currency, strengthening theirs, and ultimately gives us less of an advantage. Everybody who gets paid out over there is going to have more money relative to the dollar, so they can. It just doesn't really, and that really doesn't do very good for our economy
at all.
It doesn't do anything very good for our economy. Our dollar gets weakened.
Stocks are sold, right, because they have to liquidate, so that drives the price of stocks in the U.S. down. That's why it's S&P 500 is taking a huge dip right now, right? It's live, laugh, love, liquidated.
Yeah, there's like the UXVY, the uncertainty index, was also very high today.
Yeah,
it's like the highest it had been since even like coronavirus, or since the coronavirus.
And the fear and greed index was a really high fear level too. So, but
It did come back though a little later. But it says right here in the CNBC article, who will be affected? The pool of affected parties include banks, suppliers, home buyers, and investors. So pretty much everybody.
Mm-hmm.
Everybody.
It's you and your grandma.
Evergrande warned this week its escalating troubles could lead to broader default risk. It said that if it can't repay its debt, it may lead to a situation of cross default, where a default triggered in one situation may spread to other obligations, leading to broader contagion. A banking failure triggered by the collapse of major property developers was the single most likely scenario that could lead to a hard landing in China. Yeah, and they're just coming off of, recuperating from the coronavirus lockdowns. So this is going to be really tough on the economy if Evergrande ends up not getting bailed out, or even if they're forced liquidated, because that will cost a lot of people jobs in China. People will get very upset.
But yeah, for those of you wondering how, like, this one instance in China, if you live in the U.S. or in any other country, for example, if you're wondering why this thing that's going on in China, why is it affecting the global economy, it's merely because everything's just connected. You have investors from the U.S. in China, and that affects the S&P 500. And then the S&P 500 and crypto, such as Bitcoin, are highly correlated, so that affects the crypto markets as well. So all markets are really just taking a huge hit, all because of the housing crisis collapsing in China, and it's very unfortunate. And it sucks that it happens to be China again.
Yeah, after
responsible for the global economy collapse. Hashtag pandemic. But another issue that's very concerning is the involvement of Tether and their lack of transparency with how their stablecoin is backed. And some might even, propose that they have commercial paper that is, of Evergrande. And if Evergrande has this major collapse, that Tether won't really have much of a backing for their stablecoin. And that in turn would affect the crypto markets, because the crypto markets are highly dependent on stablecoins, Tether being the largest by market cap. I think like over 60 billion right now.
68 billion. But wait, are you talking? So you're saying Tether is closely linked to the Evergrande collapse?
Yeah, because they aren't really based in the U.S. I think they're in the East, and
they're in some place where they don't have to conform to
United
States laws.
Exactly.
For sure.
But their lack of transparency, it wouldn't be completely unreasonable to think that they have some sort of involvement with the Evergrande in terms of backing up their investments, backing up their stable coin. Being that Evergrande is the second largest real estate company in China, so it would make sense.
In the second largest economy of the world.
Exactly.
China being that, if you didn't know.
So that level of credibility would have someone wonder that, okay, Tether probably has commercial paper for Evergrande because they're credible enough. Evergrande collapsing, though, would deem, Tether not being backed by too much. And in a situation where everybody wants to cash out, such as, a crypto market collapsing, everybody wants to go into Tether to be safe. It's concerning, will they be able to provide liquidity for all these people that are trying to cash out? So
I wonder, I'm not entirely sure, but if the dollar weakens, would people just feel more incentivized to liquidate their dollars? I feel like they would just, I don't know. Because if you liquidate into cash, your dollar still has less buying power, so you might as well just stay in the assets you're invested in, or you just buy assets now, like buying the dip. But there might be more of a dip to come. Just like this ever given ship, that's we should have seen it. We should have seen it, guys. We knew it.
It was coming. But
it took way longer than anticipated to get it out of from blocking the Suez Canal. So it's probably going to take a lot longer till we actually even see the effects of what is to come, and also the drawdowns. We know two people who won't be failing. It would be Nancy Pelosi.
Nancy Pelosi and her husband.
I don't know if that's her husband or is that George Soros.
Oh, I don't know. I thought you were assuming
is that George Soros?
Their insider trading profession.
Oh, I would never say that, but yes, exactly. That's George Soros. That's Nancy Pelosi with George Soros. George Soros is a Hungarian-born American billionaire investor and philanthropist.
Hungry for money. Those
He's
Hungarians.
He's definitely a political lobbyist, chilling with Nance over here. Two hedge fund managers chatting about their investment strategies. That's gold. We have a Discord now. If you want to join it, I'll see if I link it to the description. But you should definitely join in under memes and news. That's where we're sourcing our content now.
Speaking of memes, after this we should go over some of the tweets.
Oh, for sure. Oh yeah, you sent me those through WhatsApp though, right?
Yeah.
Oh, speaking of tweets, you guys see this where Litecoin announced their partnership with Walmart, and then they deleted the tweet. It says right here, this tweet has been deleted.
So they posted this on their Twitter and now got picked up by all these major news sources. We're talking Reuters, Yahoo, Bloomberg Terminal, Zero Hedge,
CNBC.
It was crazy. They all just, pushed out the same article with a fake quote from Walmart's CEO saying how they partnered up with Litecoin and accepting payments by the end of October. But it was all fake. Somebody was able to troll the entire media so good that it pumped Litecoin up like 30 to 40%, and then it immediately dipped once it was all proven a hoax.
And it was just like one dude.
It was just one.
It was probably one or two people who just cashed out here.
Dude,
this tweet is hilarious. Imagine believing that Walmart would actually accept payments in some obscure cryptocurrency.
Dude, no one uses Litecoin. It's a dead chain. Like, it's a boomer coin. It doesn't.
These tweets are hilarious. Let me see. I think of another one here on the whole Litecoin fiasco. But yeah, and
they were looking to hire somebody in blockchain development and crypto payments infrastructure modeling. So I wouldn't be surprised if they are planning something, just not anything near.
Dude, but that tweet is so bad from the actual Litecoin.
Yeah, whoever tweeted that got fired. That intern is in a hole.
Like, dude, Walmart? Yeah, bro, let's go. Let's retweet this, bro. Global Newswire. Yeah, and Global Newswire, you could just pay for a Global Newswire, but it usually is, verified by when it's like all the main. I mean, granted, from all the main news sources, if Litecoin does retweet it, they're probably like, okay. It was not until Walmart was like, nah, this is not right. But they got 523 retweets, 1,499 likes, and 296 quote tweets. So
it's pretty good. It's pretty good stats there.
Yeah, literally your Curb Your Enthusiasm moment.
Good tweets.
Oh, this is another one. This is funny. You have Litecoin holders 30 minutes ago versus now. You see, the Great Gatsby. And then you see the guy who basically got mauled by a bear in another movie. Oh, that's very fitting, actually. Mauled by a bear.
'Cause bearish?
It's bearish, exactly. Oh, this is a picture of Machine Gun Kelly, getting a fistful of Conor McGregor because they didn't want to take a picture with him.
So does Machine Gun Kelly always carry a machine gun with him? Is that why? Is that the name? Is that why the name?
I have no idea why he has that name. Anyway, it's not really relevant to anything that we're talking about. But Tether though, pretty crazy stuff. Tether, we have a lot that we can share with about Tether. Just like this really quick. Let's just talk to you. Let me just have a link here that just explains.
With US Bank Altitude Go, get more points than you know.
US Bank is not sponsoring us. Oh, I forgot to mention our sponsors. We have a sponsor now.
It's not Tether.
It's not Tether.
Or Evergrande.
But just before we get into Tether, our sponsor here, it's called Prediction Strike. I'll link it in the description. But it's basically the stock market for this is not good. Prediction Strike. It's basically the stock market for athletes, so for sports betting. But instead of actually betting on games, you are able to bet on the actual players. And it was featured in Harvard Law School, and highly. I like this app. It's a really interesting app. I don't really follow games very much, but I have a lot of friends who do a lot of sports betting. But when you can actually pick the players and see the valuation models, like they have different techniques on valuing players, and it's also supply and demand. It really is an easier way to get in this, and they're creating a market in and of itself. I mean, you see LeBron James has been up 18%, Tom Brady 25% since a week ago, Stephen Curry. Well, this is just an example. Right now, oh yeah, they're doing football season right now. Football season did start. I think college football started.
You really could just monetize anything or make like, a derivatives of anything in this timeline.
Their
it's really cool.
derivatives is based on like points scored per player, how many yards they ran, for example, how many layups or 3-pointers they did. And it also has the lowest fees in all of the sports betting apps. Traditionally, mobile sports platforms are charging users 5 to 12% fees. Prediction strikes are much lower, 2.5% fee. And it really works like the stock market. I can go into it another time and explain a little bit more about it. But for those of you who like sports or want to get into this huge run-up for sports betting that you might miss out, you can either invest in DraftKings, you can invest in, DraftKings would be good. It's a good investment. I mean, it's not a recommendation, but or you could just actually get in there and play the sports bets where you actually make the more amount of money. And Prediction Strike, I think, is a great way to just buy players. Like, you've heard of LeBron James, or you've heard of Tom Brady, Stephen Curry, Patrick Mahomes. Who else is that guy who's from the Heat? He's like that young 21-year-old.
Messi.
No, that's not Messi. The guy who Tyler Hero. That you can buy him. I mean, I know he didn't have a great season, but you can basically buy these guys. They have more than 200,000 users, I believe. So they're growing, and I think it's a great app that would highly recommend checking out. You could download it with the link below. You should use our referral code CHUNKS, and you'll be exposed to a whole new market. And
you can't get liquidated here, right?
No, you can't take on leverage either, though.
So it's a safe space.
It's a safe space. I would say it's safe, depending on who you pick. So predictionstrike.com/chunks, or check the link in the description. You could download on the App Store, and when you're logging in and signing up, just if there's the referral code, you just put chunks, CHUNKS. So check it out. Lowest fees in sports. The stock market for sports, and it's the only sports stock market. So you're getting in, as Ricky would say from Trailer Park Boys, on the ground floor. Except that this is all built on actual valuation models and other people who are really into sports, more so than us. So definitely check it out on the Apple App Store. Anyway, going back to our programming, let's hear what Tether is all about.
Maybe it's not fully backed.
They're creating more out of thin air and then using that to buy and accumulate Bitcoin.
Because there is no transparency in Tether. That's the problem, is they were issuing Tether in whenever it was needed out of thin air. It was not backed by dollars.
There might be a fair amount of gambling mentality coming into that trust.
So that was a portion of Coffeezilla's exposure of Tether. He does a great job, but we'll sum it up for you all. And pretty much Tether, like it said in that video, it's not backed by anything in particular. They used to say that it was backed 1-to-1 by the dollar, and then they started changing their website. We can actually go to their website now.
I kind of want to break down though, like
sure, go ahead.
How stable coins are backed, for example. So
okay, yeah, that's a good way to start for sure.
There isn't, Tether isn't the only stable coin. You have USDC, you have DAI, you have BUSD. They're all different stable coins issued by different companies. And basically what makes something stable, it has to be backed by something of similar value. So Tether is not as transparent as the other stable coins in what it's being backed by, but let's go to BUSD, for example. They are required to be fully on transparent on how they back their stable coin, and basically they have a lot of cash on hand. They have some debt, and they have other investments in like gold and other stuff. Tether has said that they're backed by
The dollar. 1-to-1, but it also says every Tether token is always 100% backed by our reserves now. Before it was the dollar, which is what a stable coin should be ultimately, but ideally, like you said, they have different gold and aspects, and then they said which include traditional currency and cash equivalents, and from time to time may include other assets and receivables from loans made by Tether to third parties, which may include affiliated entities, collectively reserves. Every Tether token is also 1-to-1 pegged to the dollar. So one USDT token is always valued by Tether at 1 USD. But it's valued by Tether, first of all. It's very important.
And there's somebody at the Tether headquarters just pressing a button that creates more Tether tokens.
Right.
I don't know if it's exactly a button. I don't know how they do it with the code or anything like that. But I'm just gonna simplify it for you guys. They just press a button, and more Tether tokens exist in the world, and it's in the circulating supply. But those Tether tokens have to be backed by some sort of reserves, and they happen to make reserves of assets that increase in value, I guess, to beat inflation or to maybe make a profit, because they have to make a profit too somehow. Although I think they do it with transaction fees. I don't know. I'm not sure.
Well, I mean, they're also, but yeah, transaction fees, I'm sure they take a cut, but they're also the number 4 by volume, most traded right here. If you look at the volume, I organize it by volume. Tether is, just kidding, number 3.
JK.
Number 3 now. It was number 4 before, but it's number 3 out of the most for volume, surpassing Bitcoin.
No, it's I think that's the market cap.
No,
number.
This is volume.
Yeah, but the number. You see how the numbers don't really go in order?
Yeah, because I'm talking about volume in the
So it's not number 3. It's really
transaction.
It's not number 3. It's number 1 then.
Oh, the numbers are based on
market cap.
Market cap?
Yeah.
Okay. No, but then number 3. Okay, well, let's look at market cap. Oh, you're right. Okay. My bad. But still, based on volume, it is the most transacted currency, because people use Tether to buy Bitcoin and other cryptocurrencies like Ethereum on exchanges like, what is this really sketchy one? Bitfinex?
Yeah, Bitfinex is...
Which is supposed to be a parent company, or,
they have some collusion there, yeah.
Total collusion. They borrowed a lot of money from one another, especially when they got in trouble.
But a stablecoin makes sense, right? Like, the reason Tether is so popular is because when you're trading cryptocurrencies, you don't want to, exchange your Bitcoin for USD or dollars and then have to wait, a week for that transaction to occur, because they have to make sure it's not like money laundering or whatever. With Tether, it happens like in an instant, and now you can just hold a stable coin and not worry about the volatility of the markets, and maybe you can get in a great price like an hour or two later after you've made that transaction. With USD dollars, though, you have to wait such a long time that it's like you might miss a really good opportunity. And that's why Tether, or stable coins, have gained so much popularity. It just so happened that Tether was the first one, I think from 2014. They've been around for a while. And
yeah, I think 2014.
And that just really gave them that first mover advantage. But they, they're very sketchy in that they don't have to conform to like the US rules of transparency for how they're able to back their coin.
Not only that, only 13 employees.
And only 13
they only have
employees.
13 employees. So you're telling me that a coin valued at $68 billion only has 13 employees?
Yeah.
A stable coin the last time a fund or that amount of valuation of money was managed by so little amount of people was, what's this guy's name? He had 25 people.
The Connect? Carlos?
No, not Carlos. It's how could I forget?
WeWork? No, not WeWork.
No, it was man, I forgot. By Robert De Niro played him in a movie. Wizard of Lies. It's based on, gosh, my goodness. So this is the movie that that is basically Bernie Madoff.
I have no idea what that is.
Bernie Madoff is the biggest Ponzi scheme guy, hedge fund manager who robbed $65 billion from unsuspecting.
Oh, he
victims.
died recently, no?
Did he die?
I think I know what you're talking about now.
Did he die? I don't know. Let's look up. Did Bernie Madoff? So Bernie Madoff, for those of you who don't know, he had a fund that was worth $65 billion. And he died. Yeah, April 14th, 2021. You're right. Yeah. Yeah. Wow. Well, he's dead now, but still, he had 25 employees, and the reason he had 25 employees is because he was just faking transactions, faking everything, and he was just running a Ponzi scheme. So
he was faking the volume to make it look like
faking the volume, faking the returns, and basically he would just get somebody with a lot of money and get somebody with more money to pay out the guy below him who came in first. So everybody who
oh, that's like the pure definition of a Ponzi.
Yeah, pyramid scheme, Ponzi scheme, exactly. So he would just or like multi-level marketing, like Herbalife, you know. So no, we don't want to talk about that. But so the thing is that he had 25 employees, because when you're talking about faking transactions, you want to have the least amount of people, especially when you're dealing with $65 billion worth of money, of other people's money. Now this company, and that's because you don't want the secrets to get out. You don't want people to like start talking and find things out or be nosy. But now here you have only 13 employees.
13.
And so if that's not concerning, you know, that's more than $5 billion per employee. And we saw here that Tether is valued at $68 billion. So it's already surpassed Bernie Madoff's, you know, his record, yeah, in a sense, yeah. So it's pretty concerning, and you know they've been audited and stuff, and they've looked at bank accounts and see if things would happen, and like, but there's just it's so non-transparent, and it's very concerning that they're not transparent.
But it's strange how with all the other options that we have now available, that people still choose to go with Tether to hold their funds.
Well, because remember there was like a big thing that during a time, I think it was FTX or something, they were like giving away Tether for you to join their platform.
I think it might have been Bitfinex
or Bitfinex or something. No, but there's a lot of other platforms who are just like giving away free Tether in order for you to buy Bitcoin,
because they're just printing it whenever they want. Yeah,
right. So like how Robinhood would give away free stocks. And, you know, Robinhood got in a lot of trouble for that, too, because it's costing a lot of the companies a lot of money, giving away these free stocks. Oh, my computer's at 5%, so we should wrap this up. Or I could just plug it in. I don't know if I have a charger anyway. Do you have the charger?
We can wrap it up right now.
Yeah?
Yeah. Just for you guys, I mean, we talked about liquidations a lot. I just want to clarify what that is. It's when you put all your dollar bills in a blender and you turn the blender on at the, you know, highest level, and your bills just pulverized and you're left with no money and you're broke now. Thank you for listening. The first episode of season 2. It's been great having you guys on the show. It's been great having you know, me and Peter back. And Merry Christmas.
Yeah, I mean, look, I wish we could do this show longer, actually. I mean, let's try to extend it. We have 5%, so maybe if it just dies, it dies. Just before we go, you know, you definitely check out this video by Coffeezilla. I'll link it in the description, or just join the Discord. Please join the Discord. Help us out with generating content. I'll be on there. Elihu's going to be on there. We can talk about ideas and things like that. Any things you guys hear about. And you know, let's look at this little meme right here. on this guy who.
Incredible gains. User Anonymon posted this video showing he purchased 20 Tesla $136 strike price call options expiring January 15th for an average cost of 23 cents a share or $23 a contract for a net cost of $460 over.
All right, cool, bro. I don't know why I posted that. I thought that was interesting at one point, but it isn't. Finance graduating valuing investments for 8% return a year. High school dropouts investing in meme stocks making 69% return a year. Crypto nerds making 150% return a year from a random altcoin. Nancy Pelosi and her husband making 1,000% a year return trading options with insider information. Oh shoot, that's gold. I'm glad I posted that one. Nancy Pelosi, man, she's the best trader in the world. Actually, the best trade I think has been Jeff Bezos' wife. You know.
Yeah,
with the divorce.
That was a long hold though, but yeah,
long hold.
Successful trade.
Successful trade. That was probably the best one, I'd say.
To this day, yeah.
Oh, this is the one. This is hilarious. So this guy over here, he's made more than like $500,000 right here. $500,000 in the past year. But his account says account deficit in the buying power.
That doesn't make sense, huh?
That is an ape right there. That is the Wall Street bet. That is the epitome of the Wall Street bets ape. But good for him. He did a great job. That's great work. You know, we love you and we wish you the best.
Every time I see like a screenshot of a Robinhood app, I just get reminded of the guy who had $2 million in Doge. Back when Doge was almost $1.
Yeah, and he's going all in on Cardano now.
Oh, really?
Yeah.
Same guy.
Yeah. I saw something about that.
Dude, you guy lost
tough.
so much money.
It's tough.
Yeah.
I don't know. I think this should be our staple meme, though.
I mean, it's all right. Like, overrated as fuck, in my opinion. I mean, and you know what, though? That's typically how the bullshit goes. You feel me?
I mean, it's all right.
That is by far the best. I think that's going to be a staple of ours, aside from Carlos. But you know, we'll close it out now. Thanks for joining us again. Please don't forget to like and subscribe to the video, or if you're listening to this on Apple Podcasts, like the video, and also be sure to leave a comment if you really like it. That really helps a lot. Helps us to get guests or just source more information.
Do you have WhatsApp open?
WhatsApp?
I just sent you one meme real quick. Let's just finish it off with this meme.
Oh, it's Xi Jinping.
So it's basically him in a corner. They don't know I ain't bailing out Evergrande. And then it's that stereotypical meme with the couples dancing.
Right.
One couple is China will bail them out.
Which is my side, and they won't let them default. They don't know I ain't bailing out Evergrande. Well, let's hope something good happens with this, and if something terrible happens, be sure to listen to us, because we'll at least entertain you as opposed to giving you financial information. But we got our ears to the ground, and we're back. So check out Prediction Strike. Use our code CHUNKS. Like the video, subscribe, leave a comment if you're listening to this on Apple Podcasts, and follow us on Spotify as well, and on Instagram too. Do whatever you want. Reach out to us. We're open. We're back. You're back, right? You're not sick anymore.
I'm not sick anymore.
He's good, and I'm not lazy anymore.
And like a good Miami local, dale.
Alrighty.